Happy Monday, everybody. Welcome back to another episode of Benzinga Live. We're starting off biggest headline of the day so far. Of course, the British pound absolutely crashing over the weekend, reaching potentially parity. Of course, a few months ago, we hit parity with the dollar and the euro. Now approaching that with the pound as well. We'll talk about exactly what that means and you know how some people are playing this move, but the British pound now dropping to its lowest point in the last 30 plus years. I mean, a lot of companies, Microsoft, you name it, have already come out and given their kind of warnings when it comes to the foreign exchange rate and how that might hit bottom lines. Expect that to get worse as the dollar continues to be strong against other currencies. It's going to be bad for these big companies that do a lot of international business. So over the weekend, the British pound, the sterling, fell close to $1.03 early Monday morning before regaining some ground to stand at $1.08. So about 5 cents recovered on this crash. And we talked about this last week on Friday with Tom Hayes from Hedge Fund Tips. People are already starting to bet that this move reverses, right? Because if you're playing a long USD play here, right? I'll show you guys real quick. So let me share, and this isn't going to be some like super crazy technical chart because it doesn't need to be to get this point across. So this is the US dollar to pound. Right? We're just looking at it on Google. Let's go to a 1-year chart. If you're doing a long USD trade right now, you are betting for this parabolic move to continue. When most professional hedgers, allocators, whatever, look at this. This is the 5-year chart. We can go max if you want to. And you can just see how parabolic this move is. Look at what happened last time we had a parabolic move like this, right? I mean, granted, it was in 1985. I wasn't around then. But what about this one right here in 08 too? Straight up, boom, bam, straight down. Hedgers are already betting that this move reverses. Because again, do you really want to be on the tail end of this move, right? Even if it goes up. And this is something that Tom Hayes credit on Friday said. That even if this move continues in the short term, say the US dollar remains strong, gaining, against the pound for the next 2 weeks, eventually still the expectation is that this is going to reverse. For me, it's honestly less about the expectation. I'd be like, if you're betting on the dollar to keep going up here, we kind of be screwed, right? If all these currencies, if the euros, the pounds, just keep crashing against the dollar. So we'll talk about what this might mean for specific stocks. We saw some Asian Pacific currencies also weaken, but still, to have the currency, to have the sterling fall down 4% in one day. By 2 p.m. London time, the UK currency had bounced back to 108.55. Critics say those economic measures. So the plunge comes after last week's announcements by the UK government that it would implement tax cuts and investment incentives to boost growth. So you would think, right, that would be very business friendly. The markets would respond well to that in the UK. Oh, I mean, no, Nick, it's certainly a possibility that there's something that breaks some, especially in Europe. I think that situation is looking a lot more dire than here. But do I think, central banks will try to do something to stabilize the currencies? Do I think there will be some relief before if shit hits a fan? Yeah, probably. Yeah, and we'll talk about the markets too. Absolutely barfing, as Nick said it today. At one point, the Qs, we were up more than, more than a 1.5% at around 10:30. We've since moved down more than 1% since then. I'm looking at the Qs, by the way. So, yeah, I mean, on the Qs, it looks like we're very much so approaching if not going to take out those lows that we hit in June. But hey, good news is there'll be some good deals down there if you're willing to take on risk. Thanks, Nick. If this is your first time here, Benzinga Live, we just cover basically all the financial news. We try to be a little bit more fun, a little bit more laid back than what you would see on CNBC. So if you have any questions or anything you want to check out, just let me know in the chat. But anyway, so you would think this would be seen as the markets would respond well to this, right? But here, as this CNBC article explains, the policies, here's how it's being perceived. It doesn't seem like the UK government is throwing the market a bone here in terms of having much more tempered fiscal trajectory. And so I think at this point right now, at the path of least resistance going to remain lower. So it's a major challenge to fight inflation while blah, blah, blah. The lack of commitment to fiscal discipline in the UK, along with strong dollar, led to pound weakening sharply. I think the collapse in the sterling actually led to further risk aversion, generally risk-off sort of sentiment, intensifying further down. So critics say this economic measures will disproportionately benefit the wealthy and could see the UK taking on high levels of debt at a time of rising interest rates. So basically, the way this is being seen by the market, seen by economic experts is Liz Truss coming in. She's going to be, try to seem very business friendly, do some deregulation, announce some tax cuts, announce some, investment incentives. But like in the U.S., in the U.K., you have very, very stark wealth, wealth inequality where the richest are super rich. And so people are saying, hey, in order to have a well-functioning economy, it's not about that you have, a few people at the top being ultra billionaires. A strong economy is determined by having like a strong middle class, people that have money to go out and spend on goods, not necessarily sort of not that they have to put their money on or buy things on credit cards, but be able to have enough cash to go put that money back into the economy. And you hear this from billionaires themselves that say, hey, look, I, can only buy so many pairs of blue jeans in a year. I can only buy, 1 or 2 cars a year. At the end of the day, once you have a certain amount of money, most of that's just going to sit in an investment account, in a savings account, and accrue some interest, accrue some gains there. But you're not putting that money back into the economy. Whereas, if again that is a stronger middle class, it ends up being better for the overall economy. So the UK is being hit right now. People are not liking Liz Truss's new economic policies. Of course, this is brand new, so we'll have to see over time the effects that it really has. But it's interesting for me because I don't really follow the Forex markets that closely, seeing this news story and how it all intertwines, right? How the economic policy can then affect the exchange rate and the Forex. I don't know if Shelly's in the chat or if we have anyone out there who usually watches Forex, but I'd imagine that this past week, really these past few months has been the most volatile, the most like insane time to be a Forex trader. I might see if let's see if we can get a Forex trader on right now. It's making me wish I like was a Forex trader. You know what I'm saying? All right, let's go ahead and macroeconomics. Yeah, it's tough. I mean, that's why right now you have so many. I mean, like so many people basically being like, I don't even know if the Fed knows what they're doing. These are like the supposed economic experts of the country. I saw this tweet too, and this is, of course, this is just from one chart, one thing. So I don't. UUP, that's the dollar. That's the dollar bullish, dude. So I found. Oh my god. I found texts. I sent texts to my friends in April 2021 saying the US dollar is about to be strong as hell, and they all like on the group chat like disliked the message saying, "What are you talking about? Inflation's about to be like so bad." And I was like, "Maybe, but I still think the US dollar is going to be really strong." That was literally back here, April 9th. Since then the dollar's just gone straight up 24%. But yeah, I think the thesis, Easy Mike, I don't know, I'm not going to speak for Jay Rice, but like I was talking about earlier, professional hedgers, people running hedge funds, people are betting that these moves eventually reverse, right? You can't have a parabolic move just continue forever, right? We talked about that with energy names, right? Right here. Once Chevron went from September to, once it went up 77%, Chevron, right? We're not talking about some ARK stock, some pre-revenue biotech company, or some high-tech growth company. We're talking about Chevron. Once Chevron made this move, right, a lot of people were like, hey, yeah, any single time ever historically, we've had moves like this. Even in the energy markets, it's followed by a correction, right? You can't have a straight 80% parabolic move, so it's not the same exactly to let's do the United States to euro instead of the pound. The charts look the same. This thing's up 26% in the last year and a half. That's too much. That's way outside of the standard deviation of moves in the Forex market. So that's why you have professional hedgers saying, hey, even if the US dollar is going to remain strong in the short term, we're betting that this move comes down. It's not going to keep moving just parabolic to the upside. Does that mean it might go up another 5-10% in the next 3 weeks? Sure, of course. But I'd bet you a lot of money a year from now, right, we're seeing that move has reversed a little bit. Yeah, I think that's the big speculation right now. Is I think a lot of people are really worried about the UK or the Europe energy situation. I don't know. There's a lot of I don't know. I mean, there's a lot of shit going on in Europe. A lot of, I think politically too, you see both Sweden and Italy have had new leaders coming in that some people see as potentially problematic. I'm not going to get into that because try to make this show, keep this show much about the markets and finances general. Don't need to delve into politics unless anyone, wants to. So let's go ahead and play the intro. I just realized we haven't done that. When we come back, I'll pull up my Benzinga Pro. We'll do a quick run through of the overall markets. I just got word from Jake Wujastyk from TrendSpider that he is not going to be able to make it today, but we might be able to get Jason Krutsky, who we've had on a few times from TrendSpider, if he's not able to. Let's go ahead and while I'm logging into my Benzinga Pro, let's play the intro. We will come back, talk some trades, talk some shop, maybe talk some sports, whatever you guys want to do when we get back.
This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher. So.
Let's get Meta Hammond on the show to talk some IPOs. Jake Wujastyk from TrendSpider. We have a breaking news.
Alrighty, guys, let's go full screen here. Let's just pull up the cues because, like someone said in the chat earlier, the market's kind of been puking today. We'll go to a 5-minute chart. See this move, and that's what I've been saying. I don't really think any rallies right now are going to be able to sustain themselves until we get some more pressure. We need right now what the market's waiting for. Of course, the big thing is seeing inflation truly fall, giving us some confidence that the Fed doesn't have to keep raising rates as quickly. We don't have to keep doing 75 beeps every single month. That's the big thing. But there are other things too, right? We've been talking about the energy situation. We've been talking about the Forex situation. Hell, even politically in Europe right now, there's a lot of unrest, a lot of unknown that's causing uncertainty. We know the market doesn't like uncertainty. So my anticipation is that once we start getting, even if it's bad, right? Even if some of the news is bad, I think getting certainty from all these different areas that you have so much unknown right now will help us get closer to the bottom. And right now, you know, I think it's a silly thing to try and call a bottom. We're probably not going to guess the bottom perfectly. It certainly looks like we're going to start making new lows. We could potentially hit some sort of double bottom here. So we're at a really important level right now. I believe we got down to 363 in June. Low 362.17 technically. We're at 366 right now. So it looks like we're certainly going to come down and test these lows. Right there is a very interesting spot because we're either going to bounce from there or break through the lows. And if we break through the lows, the idea is it's going to be a little bit more bearish for a while. But again, you're not going to time the bottom perfectly. So you're basically just in a position, depending on your time horizon, where in my shoes, I'm like, okay, here, SPY under 370, like I'll start adding here. And if we drop down to 330, okay, I'm down 10%, whatever. But I'm talking about a long-term investment. So I'm going to hold on to it for 5-10 years. And I'm very, 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 very confident that 5 or 10 years from now, the S&P 500 is going to be higher than it is today. Probably even making new all-time highs. But some people disagree with that. Some people are worried about a potential lost decade. It's just, to me, we have such short attention spans now. People are talking about a lost decade. We're not going to see these highs back for another 5 years, yada, yada, yada. As soon as the Fed pivots, which is coming, we're going to be talking about new all-time high. You know, it's just going to flip like on a switch. So again, we're not going to be able to time the bottom perfectly. Unfortunately, I wish we were able to. So you're stuck just finding companies, or swing trade ideas, and we can talk about both. But you have companies, you know, that maybe you want to add to long-term that are now at reasonable prices, right? I've seen a lot on Twitter, people sharing the Buffett indicator, the fair value of stocks of the S&P 500 has reached back to fair value. We don't always bounce off there. A lot of times we get below fair value before we start coming back, so we'll see. But yeah, guys, I mean, overall, I don't think, I wouldn't be essentially betting any money that I need or anything in the short term on some sort of reversal. You don't want to fight the trend. The trend is your friend. You don't want to fight the Fed. So with that said, we're in a downtrend. The Fed's hawkish. So why go long on like on a swing or short trade here? Short-term trade, I mean, not short trade like not like shorting the market. I will at some point, I'll try to play, because we will see, and maybe it'll be sometime this week, maybe it'll be sometime next week. We will see one of those days where you get kind of a squeeze-fueled rally where so many people are short, and then, you know, the market's not going down, so people start covering it. Next thing you know, the Qs are up 3.5%, 4%. It's hard to identify when those days are coming, other than they typically come after a stretch of red days. See, we can see here on the chart, looking at the Qs, looking at daily, we find the biggest green candles. You know, a day like, let's see, what was this day? Up 2%, not bad, but see how that came after, down 4%, down 1%, down 1%, down another percent. So we went down like 6% when this is a green candle, but it was pretty flat. Another red day, followed by a 2% rally. And then, you know, actually rallied a little bit longer, then gave up those gains. But back here too, look at this day. This day was July. Oh, this might have been, no, when was this? I don't know, July 27th. We went up 4.23% on the day, on the Qs. And that came after, you know, 1.75, 0.5%, 2%. So we basically went down 4% over the span of 3 days and got that all back over a day. And then this rally continued for that. This is when a potential soft landing looked possible. When we saw inflation coming down and jobs were still growing. Here's where we got, okay, no, inflation hasn't peaked yet. CPI actually rose month over month. So then we started crashing again. And now we're back where we were. Again, if you were sitting there thinking, oh my God, when the markets got down to here, I wish I would have added this, or I wish I would have added that. Now's your chance, because we're right back down there. Do we have any Forex traders in the chat? Krusty saying it used to be profit taking Tuesday. Now it might be short cover Tuesday. Yeah, that's what I'm saying is like you got to find, I would just implore everyone, right? I don't think, hold on. I don't think, this market's been really tough, right? If you're short, I feel like I've lost money when I've gone short. I feel like I've lost money when I've gone long in this market. One thing that I will say is that I don't think it will be as simple as kind of following the trend. So if everyone's buying puts, that's going to make me consider buying calls. Or maybe even being the one that wants to sell some of those puts to people. And if we saw the headline last week, the puts contracts were the highest on the S&P 500 than ever. Thank you. Question was just, do we have any active Forex traders in the chat? I know Shelly trades Forex. I don't see her in the chat today. But basically just, I don't trade Forex, so I know this Forex market has just been insane. But I'm curious, like, what right now is among the Forex community, like, the talked about trade. Because I assume it's not long US dollar. What plays am I in? So right now, I'm actually not in any, like, swing trades or anything. I've kind of been just cash right now until... But I in my long-term investments, we can go through some of the names I have in my like long-term portfolio. But again, the biggest thing when talking about trades or investments is understanding the time horizon, right? Because if your goal is to buy a stock and sell it 2 weeks from now for a 10% gain, all right, that's great. We can talk about stocks. We can talk about movers and stocks that could be good. Options for that. But when I'm talking about stocks that are in my long-term portfolio, I'm talking about companies that I don't mind owning for 5+, 10+ years down the road. GBP looking tasty. And that's what I think too, or at least what I would assume, right? Is that at this point, the move wouldn't be to play the dollar long, it'd be to play the sterling long. Look, we're at lows not seen since... We're lower than that. We're lower than the February 8, 1985 lows. Yep. British pound, euro, yen, all energy dependent, all down. Yeah, the contrary play is once the move's already played out. And again, if I opened like a leveraged trade on long the pound right now, I wouldn't freak out or close it out if it went down 5 or 10% in the short term, because I think that's the expectation, right? The trend is your friend. So the trend is that the US dollar is going to keep going higher, but eventually that is going to reverse and come down. All right, haven't gotten word from Alrighty. Waiting on Euro USD. Yep. Let's go back to Benzinga Pro. What? Let's talk some stocks. Let's move from Forex to stocks. Yeah, lose the Queen and their currency, and a new prime minister who doesn't, I guess, based on the currency, doesn't seem to be doing to it. What do you do if you're the leader of a country and you come in, you get sworn in, and literally within like 2 weeks the currency starts crashing? Let's see if we can. Oh wow, Q's got a little bounce here. So look at the 5-minute chart. Wow, there you go, Q's. Look at that right off the open too. We just absolutely ripped off the open. I could be talked into. I just don't know. Like, I would buy. I don't know. I wouldn't buy puts right now. I wouldn't really. I don't know if I'd buy calls either on the overall market. If I had to, I'd probably buy calls just because of how bearish everyone is. That it scares me. Right? We talked about this last week. The AAII, the American Association of Individual Investors Sentiment Survey. We hit 1-year bearish highs. The most bears we've had all year. Wasn't back in June when we were hitting new lows, but now. And I think a lot of that is with, the energy situation scaring a lot of people. I really don't understand this either. I don't understand how on their fear greed index, the greed is still. It would seem like fear is up here with how many people are buying puts and whatnot. Ooh, free growth investing special report. That's interesting. Let's see. I do. Talking about Tesla now. If you guys saw last weekend, it went semi-viral, an interview on CNBC. Oh, Shell, you hate the universe? Why? Snowflake seems super weak. Look at FNGU. All right. If you guys saw, it went kind of semi-viral last week. The Wharton, the UPenn, University of Pennsylvania School of Business, Wharton, the professor went on CNBC and basically lamented the Fed, saying they didn't know what they were doing, yada yada. And a lot of people were arguing with the Wharton guy. And I actually thought he was right. And then Elon Musk came out defending him, which I think from the business side, like, of course, Elon and Tesla is going to be able to benefit more from lower rates. But Elon has been saying for months that prices of goods going into, like materials and whatnot that Tesla needs has been falling. So it doesn't surprise me that from Elon's perspective, he sees that, okay, we've dealt with the most we've dealt with the worst of inflation, and now the Fed is hiking. It doesn't make sense as a business owner, right? You would want the Fed to have been hiking while inflation was rising at its highest, not while goods are falling. And I have a tweet, and this is just from one chart, not at all I would say like a perfect indicator or anything like that. But this is coming from Colin Roche. He is on Twitter. He's the chief investment officer of Discipline Funds, as well as the founder of Orcam Group. He's got a good Twitter following, about 88,000 people. Good follow. I would recommend it on Twitter. I'll drop his Twitter in the chat. Let me go ahead and get this. Oh wait, no, I screwed up. Sorry, guys. You guys can't see my screen. Now you can. Oh whoa. Basically, this is the Freightos Baltic Index Global Shipping Container Index. So if you guys recall, we were talking a lot about different shipping stocks, right? Your Zims, your Grins, I believe. We had a bunch of different shipping container stocks we were talking about because the prices were going parabolic. And this is what I was talking about with the Forex trade. Anytime you see a parabolic move like this in financial markets, I'm okay making that generalization. Anytime. I don't care if you're talking about Chevron stock going up 75% in 6 months. I don't care if you're talking about AMC or GameStop. I don't care if you're talking about, whatever it is, HKD, whether you're talking about Forex. Anytime you have a true parabolic move in financial markets, you get a correction. The question is how long does that move last? Here's where the Fed, where there's red circle, the Fed starts freaking out about inflation, starts raising rates. Now, in a perfect world, in an ideal world, the Fed starts intervening here, right where my cursor is. When shipping prices went from, I don't know, say 1,000 down here. I don't even know with how this chart is laid out, but when it went from 1,000 to 2,500, when it went up 250%, maybe that's when we start freaking out. Oh, then it went up another 100% from there. And then another 100% from there. And then kept going higher. And now we're freaking out about inflation. So you could say, yeah, but look how good of a job they've done. They've started freaking out here and the prices have continued to crush. Or you'd be in the camp that, okay, some of these supply chain issues were starting to normalize and we would have seen truly a transitory effect on inflation. So, it's increasingly looking like the Fed panicked right at peak inflation. I guess you measure inflation by the Baltic Freight Index, which you probably shouldn't, but okay. It's a measure of global demand, not inflation. So I think Colin's point here is that you saw a big drop-off in demand before the Fed started raising rates. Maybe that was from anticipation that the Fed's raising rates. Either way, I don't have a Forex trade live right now, Shelly. I was saying if I were to, I wouldn't go long the dollar at this point. I would go long the pound or long the euro and expect that move to revert. I can prove it to you guys. I texted my friends in April 2021 saying the US dollar is about to be strong as hell. They all joked at me saying not gonna happen. Yeah, no euro. That's just a hedge against the dollar. You trade dollar versus euro USD pairs. I'm just saying I wouldn't go long the dollar at this point. Ooh. Duplicate articles showing up on the Forex page. That's a problem. That is a problem. What did Brent Johnson say with his dollar call? You know who really looks like a genius is that guy from MLB TV who said back in April that that Albert Pujols would hit his 700 home run on a Friday night in Los Angeles. One of the craziest sports calls I've ever seen. Although he said it was going to be against Kershaw, which it was not, but it was still a good call. Good call nonetheless. Big money in Forex. All right, I'll reach out to Brent Johnson right now. See how quickly we move here. I don't even know. Like you basically have to trade leverage on Forex to make any money, right? Let's go through this article real quick. All right, so new UK Prime Minister Liz Truss announced a bold stimulus program that includes tax cuts and investment incentives. So honestly, like this is what's surprising to me is that essentially the free market, right, your Forex markets, your bond markets, are saying they don't like this, are saying they don't like what would usually be seen as business-friendly policies, tax cuts, investment incentives. Again, the issue that I think some economists have looking at this is they see that it will help potentially the ultra wealthy in the UK get richer, but not help the overall economy. I'm not sure. I don't know enough about the UK economy or really what's going on with their political situation. But this chick Liz Truss just came in like 2 weeks ago, right? The Queen died. Now the currency's crashing. She's not having a good couple weeks so far. Investors have been spooked by the new UK tax cuts and investment measures that critics say will disproportionately benefit the wealthy and contribute further to the UK's debt problem as interest rates rise rapidly. So, yeah, I mean, I think, like, again, it's surprising to me. It's kind of counterintuitive because you would expect, business-friendly tax cuts, incentives, the dollar or the pound would be strong. There is, of course, a big debt problem in UK and Europe in general, right? We talked even before COVID, really before the COVID crashed, a lot of the British banks, RBC, a lot of these banks were struggling. And you had a reverse repo type issue over there. And I don't think it was ever as bad as like what we had here in 07 or 08, but a lot of economic problems. And I don't think the Brexit thing has been too great for the country in terms of its economic policy, right? Has made a lot of goods and whatnot more expensive, taking spending power away from everyday UK people. But neither here nor there. My main point stands just that, hey, look, this move has been freaking incredible for the US dollar to the pound going back to May of last year. Up more than 22%, the dollar is against the pound. But at this point, and I say this knowing full well that the dollar can and probably will keep going higher, but this move is going to reverse eventually. You don't get these parabolic moves in the markets without some sort of reversal, without some sort of correction. Slinky, they cut out the highest tax rate. That means the highest income earners pay way less tax now. Yeah, and my point is that I think historically, right, whether you're looking at, Reaganomics or whatever, here in the US, we've seen moves like that as business friendly. I mean, even like Trump, when Trump had a lot of tax cuts and like business friendly policies and the markets did really well. Those were seen as business-friendly policies. This is being seen as it's not the right move. And Slinky brings up a good point. Exactly, they're doing it backwards. They're stimulating rather than tightening. So UK is seeing inflation just like here. In fact, even worse inflation. And instead of tightening, they're trying to stimulate the economy, but not really doing so from the bottom up or from middle out, right? Like if you were really going to go bold with the stimulus package here, for me, it wouldn't be giving tax cuts to the wealthy. In fact, from a purely economic standpoint, it might make more sense to slightly raise the taxes on the richest people, take some of that extra money you're getting, and help the people out that now don't have money to spend on things because their energy bills are so high. Think about it. If you're making, say, $2,500 a month in the UK, and, typically you're spending a certain amount on that in the economy, going out to restaurants, services, goods, and now you just got to pay your energy bill. You don't have money to spend in the economy. What's that going to do? It's not going to be great. So if you're going to get bold and do some sort of crazy, stimulus package at the time where you're seeing the highest inflation that you've seen in 40 years, I wouldn't do one that doesn't benefit everyday people, the people that are going out every day spending money in the economy. Like I talked about earlier, the richest people have most of their money sitting in an investment account. And at this point, with interest rates being so high, probably a lot of that's not even going to be into, investments into companies. It's going to be in treasuries that are going to get them 4 or 5% a year. Think about it. If I were ultra wealthy, right? I'm talking about if my net worth were $10+ million, I'd put $5 million in a 4% thing, right? And get $1 million, or no, how much? So if I put 5 million in, let's see, 10% would be 10% would be 500,000. So I guess it's honestly not even that much. Good. I mean, you can get 250,000 off 5 million. That's still not that bad. That's still not that great. In U.S. I don't know. I mean, I assume the UK has bonds as well that are going up. Yeah, the UK current, it's basically the same. Oh, but you're saying they would rather do it on U.S. Treasuries because if you're betting on the yeah, I'm saying that. Yeah, the UK 10-year government bond has about 4%. But you might see the US T-bills as safer than the UK ones. I don't really know. But either way, my point was just that the ultra wealthy, right, aren't spending the majority of their money in the economy. The majority of their money is sitting in investment accounts. Yeah, I don't think communist policies would help the UK economy or the Forex exchange rate for them either. I'd more so just like a smart economic policy. I think it's well documented and well known that the idea of essentially trickle down economics is great in theory, but doesn't work out like that in reality. And so you're seeing Trussonomics here. Liz Trussonomics. Good old good old tax cuts for the ultra wealthy and investment incentives. And what she's really doing a good job of, I'll give her credit for this. I've never spent time in the UK or Europe, but now that the dollar's so strong and it'd be significantly cheaper for me to do so, right? My dollar, if I bring a bunch of US dollars over to London right now, it's basically getting a 30% off everything. Go to a hotel, it's so many pounds. All right, I have dollars, strong. She's maybe trying to do this to increase tourism. That people say, okay, this is we have had a chance to go vacation in Europe right now while the dollar's really strong. It's going to be a little bit more affordable. So you got to give Liz credit where credit's due. I'll get stabbed by a plastic fork in Europe. I don't get that. Yeah, there's I do think honestly, and this is just me wildly speculating, I do think part of the unrest in just the overall markets right now in the Forex is seeing you had Italy, Sweden appointing what again, this show's not about politics. I don't really care. But from the headlines, I don't even follow international politics like that. I follow U.S. politics pretty closely, but not international. The headlines I've seen from both Sweden and Italy the past 2 weeks have been that they've elected like far right leader. So like usually that if across the board it's going that way, and they're nationalists. Like there's a rise of nationalism and authoritarianism. People are anticipating some more political unrest in Europe. Again, this is just what I've read, not me. I'm just conveying what I've seen out there. Yeah, just chaotic. Field trip? Trying to go watch some Champions League? Yeah! Go to Europe. See, that's what I'm saying. Like, we could probably buy some cheap tickets to the Champions League right now, and shout out Liz. Shout out Liz Truss. How's, do they have, approval ratings on her yet? Oh my God. Wait, so she came, this is before she even started. Only 12% expect Truss will be a good prime minister. So all right, so you come in with 12%, and in your first 2 weeks, again, the queen dies, and now the currency's crashing. Man. The more Tory voters see of Liz Truss, the less they like her polls show. And Tories are the more like conservative group in the UK. So I don't know what she's doing to piss them off. Voters already hate Liz Truss. I don't know. It seems like a mess over there. As messy as our politics are right now in the US, as not great as our inflation situation is, I don't know. It's like, hey, at least we're not UK. At least we're not in Europe right now. Because they're dealing with it bad. One thing that I did want to talk about, because we've been talking about this a lot the past 3 months, gas prices. It does look like we finally hit that point where we went from falling gas prices. Jay Rice, again, I wasn't trying to make it political. I figure, the numerous headlines I've seen about, yeah, and I'm okay with that. I'm okay with talking about the GDP that I don't know a lot about Forex or the pound or the dollar. I know enough that I wouldn't be betting that the dollar keeps making this move, already made the biggest move against the pound in the last 40 years. It's like Shelly, it's like when we went long the ruble. No one else wanted to. It was crashing, but we bet against that parabolic move, and it ended up being the right thing. Boris better than Truss. I don't know. That's actually a great question. That shows how little I know about UK politics. I don't know if Liz Truss was appointed or elected. I think appointed, because Boris Johnson had to step down. Jay Rice, again, I don't want to, the show's not about politics. Again, I assume, and I'll look more into it for you, because I don't want to talk about anything I don't know on the show. I assume, Reuters, whoever, all these different news outlets that have described both the new Sweden leader and the new Italy leader as far right have reasons to do so, other than just that they are love their families and Christian. Andy O saying, here's my theory. Europe. I didn't know Europe's using different pronouns now, but it's good to know. Already have agreement with the U.S. to peg the U.S. dollar to euro if the energy war U.S. dollar situation gets bad enough. Yeah, I mean, I think it goes without saying the various central banks have talked about these situations. Like anytime they have those G7 meetings and I think Even over the weekend, even last night when the pound started crashing, right? You had a lot of people saying that the central banks were going to come in and try to start doing something. Yeah, the Brexit, again, I don't know enough about UK history, but it seems like to me that's been one of the biggest just political blunders in recent memory. I don't know though. I don't know. It was popular. People loved it, but then once the ramifications of it started coming in, right? Certain things got more expensive. I don't know. Longing ruble because of history is different than shorting US dollar because of a probability to consolidate. That's fair. But I think what can I also say? I'd be longing the pound because of history or longing the euro because of history. Look at this. History shows me, right, that anytime we've made a move like this, right, a truly parabolic move, whether it was in the 1980s, whether it was in 2000, and this is the US dollar to the euro, it's come down. And again, my whole point, the main thing I've been saying is that I kind of do expect this move to continue in the short term. But do I want to say this trade of long US dollar against the pound or against the euro, say this trade is 80% through? Do I want to go long the dollar to try to squeeze that last 20% of the trade out? Or get in on the flip side of it now, and then when it does reverse, you get 100% of that trade to the downside. Yeah, I mean, you just have... let's go back to Benzinga Pro, talk about some stocks, just because I don't know. I might know a little bit more about stocks and Forex, which is fine to me. Whoa. Don't look. No one look. There we go. Oh. Interesting. Never gotten this message before. What should we long? What should we long? Give me a company. I saw an interesting one the other day for a LNG or liquefied natural gas shipping company. Basically, that we're going to be exporting a lot of LNG to Europe all winter, and even it seems like to me, LNG, liquefied natural gas, has really. It's clear it's going to be around as kind of that stepping stone as we start heading toward more renewable energies that we don't have the capacity right now to power our grids for all our energy uses through clean energy. But as we're trying to get off coal and more outdated fossil fuels, liquefied natural gas is kind of the stepping stone. And as you can see here, as the global demand for oil increases, liquefied natural gas actually outperforms. Well, this is Cheniere, but you have what's the UNG? The United States Natural Gas Fund. Whoa. Hey. That's a revert to the trend line, though, fam. Look at that. No, it's actually not that good. The trend line. Maybe more like that. We're below it. I gotta find this shipping company, though. I don't know. I'm trying to find, like, interesting longs like that. I think the cosmetics are interesting longs right now, showing some strength against the overall market. Netflix was showing some weird strength against the overall market last week. I mean, look at Netflix on a daily. Hasn't really been making any crazy moves, but June Here, we were hitting lows in the market, right? Think about the Qs were down at their lows in the markets in June. Netflix is like 30% above its highs from there. Qs are back down at their lows, but Netflix is 30% higher. So since mid-June, Netflix has outperformed the overall market by 30%. Could be setting up for a trade. TNX. I don't know what that is. Is that like a treasury yield? Yeah, it is. Oh, man. Yeah, looking at the 10-year yield. Sabrina asking, was it GLNG? It was some, let me try to find it real quick. Crude is down under 80. Oh, you want to start building an oxy position, Crassy? Yeah, this is what I was talking about, literally like at its highs at like 75. Yeah, again, my position on energy trades has been kind of steady for the past, like, since like the Russia-Ukraine war. If you think we're heading toward a global recession, then all of these companies are actually easy shorts. I've been saying that even when we were up here. I like out of kind of your more traditional like oil and gas plays, I like Oxy the most. I bought some Oxy shares when I saw the news that Warren Buffett filed the paperwork to buy up to 50% of the company, because I believe right now he has about a 20% stake in the company. So if he ups his ownership in the company by another 30%, that's significant. But you have, if you have weakening demand, and that comes at the tail end of basically 2 years of rising demand for oil, I wouldn't be surprised to see this gap get filled to the downside, especially if we continue to get kind of bearish headlines throughout the world, slowing demand in the oil and gas fields. Sorry, let me see. It was from Quiver Quant. The shipping. Man, these guys do a really good Quiver Quant does a really good job on their TikTok. Trying to find their I don't know. I can't find it right now. I'll look for it and share it with you guys tomorrow. There's some shipping stock that oh wait. Is this it? Sorry guys, this is not good Not good show. Looking for this TikTok to try to feed the ABB dry. No, it was a actually here I can just do this. LNG shipping companies ships. It might have been this one, FLNG. Flex LNG. Flex LNG is a liquefied natural gas shipping company with a fleet of next-generation LNG carriers with large cargo capacity. The fleet consists of 13 modern LNG ships, 10 existing and 3 under construction for delivery. All LNG carriers are equipped with slow speed. So here's the thing: is if you are thinking there's going to be a big global recession, like I said, and literally any of these energy names are short, including this one probably. But there is some demand that won't waver, right? In the UK, people have been freaking out about, okay, what's going to happen this winter when it gets cold and people got to heat their places and energy prices are skyrocketing, yada, yada. Even in a recession, right? People might be driving to work less. People might be traveling less, less jet fuel needed for different trips, but people are still going to need to heat their homes. I think liquefied natural gas, I think that as a, as long as the supply for energy and oil in Europe remains constrained, which is tied to the Russia-Ukraine war, basically as long as that conflict is going on, I believe, we'll see elevated prices and elevated demand for liquefied natural gas. Of course, global recession, this stock will come down too, but just interesting. Oh my God, guys, this market today, woo-wee, we were up 1.5%, right? This morning at like 10 o'clock. We were up at 280 on the Qs. We're down at 245 right now. Big move to the downside the past 20 minutes or so. You can see here, this is just a 5-minute candle. We went down almost 0.5% on the Qs in 5 minutes. We are now down 0.4% on the day. Hey, man. I don't know. I don't know what to do here, fam. Perhaps ship then? Let's see what ship is. Seatime Maritime Holdings. Well, yeah, I mean, that's why, like, these shipping companies, like Zim, we were looking at, and I just showed that chart earlier of the prices of global freight. Look at this thing. This thing's on a 5-minute chart. No wonder it looks so bad. Look at this thing. We went parabolic March 2022, so that was about 6 months ago, almost to the day. March 25th, 2022, 6 months ago. Zim was at $90. And this is how you get a value trap, right? Because it looked really cheap. The PE was like 3 at this point because its earnings were so insane. The company's earnings were so insane because they were able to charge like 10 times more than they normally do. But as those prices normalize, so are the company's earnings. And then all of a sudden that PE is going to change. The value, the multiples look all different. Although, it's kind of like the energy trade. I'd be buying this right now if you think, oh, a lot of the fear out there is overblown. We're not going to go full recession. I think demand will start to pick back up for goods and services across the board. Then I would long Zim. I think it's that simple. I really do. But the divvy is nice on Zim. That's fine. I don't agree. Oh my God, what? That doesn't seem possible. See, I don't know. I don't really know. Yeah, and that's fair. I think for me, how I view dividends and stocks that I actually want to own, if a company I want to own has a great dividend, then great. That's awesome. It's a nice little bonus on top. It's not going to really sway me, I think, either way, right? And especially like historically, if you looked over the past 20 years, right? And you weren't buying Amazon or Apple because they didn't sell or they didn't give dividends like different energy stocks or bank stocks, then you missed out on a lot of returns. It's kind of like if a girl, if I'm trying to like date a girl or something, I don't care what type of family she comes from, or you know, if she's wealthy or not. But if she happens to come from a really rich family, it's not a bad thing, you know. It's like, okay, that's fine. That's how I see dividends. Me, Marky, saying give oil oligarchs monopoly credit. They had everyone head in their noose in the 20th century. I mean, I don't know about. Yeah, I mean, oil. I mean, oil's basically been the precipice for like all of our wars over the past 20 years, right? I mean, they said it was because of 9/11, but then they went into a country that didn't really have anyone to do with 9/11, but they had oil. But that's neither here nor there. If the family is crazy run, interesting analogy. I honestly think it fits because it's not going to be a deal breaker. Really, anything that I sway into my decision making. But if it happens that the company pays a dividend, if it happens that the stock pays a dividend, then great. If the family's crazy run, yes and no, because like some people have really crazy parents, but then they're okay people, you know, they're like better people because of it. But typically, if someone has crazy family, they're gonna be crazy too. Lord, he got muted a week or so and never came back. Lord Byron, right? I don't know. It's a good question. I'll make sure he's not super. I'll make sure he's not like super banned or anything. That'd be kind of funny because when I put user in timeout, it's like a 5-minute thing, and I honestly don't do it a lot of times. I feel like you know, on some other shows, some other producers use it more. But it would be kind of funny if someone like went from watching our show every day to getting muted for 5 minutes once and being pissed off about it, and then they never came back. Oh, Mitch had to mute him, MD saying. So, all right, guys, we've got about 18 minutes of the show left. We can take this time to just take tickers from the chat, like go through any stocks, go through anything we would like to see. Is that what you want to see? Spy, spy, spy. What number did I say we got down to last time? We got down to 362.17. Water stocks. How's Tesla looking? XBI. What was the one FNGU earlier? I'm without me trying to sound like really, really dumb. JB, can you let me know like what you mean by water stock? Because we were looking at like maritime shipping stocks earlier, but I assume that's not what we're talking about here. You talking about like drinking water? AWK, good water stock. AWK, American Water Works. All right, this is, and I really don't care. You guys can call me a lib or a commie or whatever you want in the chat. There should not be allowed to be for-profit water companies at all. There should not be an industry for, I guess, the argument on the flip side would be people would say that the free market, like it's expanding like clean drinking water in more places. But I don't think that's true. I mean, think about it. People have needed water forever. What's the free market incentive to like get, you know, I really don't know. I don't. Hey, at least we got some people. Hey, hey, us Aarons, we run together. You wanna fight me? You're gonna have to go with my boy Aaron Sachs and my boy Aaron Bryan and my boy Aaron Thomas over here. You guys have to fight all of us. We are running out of water. Yeah, exactly. So like that's where I come in, and I'm like, people are gonna be like, oh yeah, the free market's gonna solve these problems, and we're like actively running out of water as we're have this like for-profit water thing. One thing that's really interesting, I don't know, is Nestle publicly traded? I guess it's like an OTC stock. I went through, I didn't realize this, but very interesting. If you guys haven't been down this rabbit hole before, I would very much recommend it. I think someone did like a deep dive, like 20-minute like expose type YouTube video on Nestle. A lot of kind of screwed, and that a lot of it has to do with like drinking water. A lot of screwed up shit there. Not a fan of Nestle after watching this video. Granted, it's not a very you know, doesn't give you both sides. It's very much 20 minutes of a video of just saying, hey, fuck Nestle. But they got their point across, because I watched that and I was like, you know what? I'm out on that. Oh yeah, dude. Lake Mead drying up very, very sad. Yeah, 100%. Sabrina, water is more important than oil. I can chart. We if we'd be able to, you know. Why is everyone leaving? Easy Mike, where are you going? Peace and love, Easy Mike. Used to water ski that lake, not anymore. Yeah, I don't know. I do agree. Water more important than oil. So, okay, what's the trade here? What's the trade? Are we long these companies? Are we short them because we fundamentally disagree with their existence? JB saying because of the fresh water shortage. Sabrina saying I hold WRTG. What's this one? Essential utilities. AUK, American Water Works. PE. What are we looking at here? So this is interesting to me. Whoa. What the hell? I mean, hey, I wouldn't have expected this. That a utilities water company moves this much, but god damn, this thing's making some moves. This thing went from 50 to, I guess it's not even that big of a move. It's just the fact that it looks like it follows trends really well. That like once it's in a downtrend, it's just going to go down every single day. And then once it comes in an uptrend, it's going to go up every single day. I don't know. I've never looked at these water stocks. I've never traded them. I honestly don't know if I really have a opinion on them. Yeah. See, is this like one of those things where, let me see something. American Water is the largest investor-owned U.S. water and wastewater utility, serving approximately 3.5 million customers in 16 commercial. Yeah, I don't know. What's going on in in Mississippi. Did they get their... Did Mississippi get some water back? Oh, man. Good luck, Easy Mike. Cat to the vet. Always, I'm always more nervous when someone goes to the vet than, like, you know, you could tell me I'm going to a doctor's appointment to get checked, to see if my, to see if this tumor is cancerous. But then I also got to take my dog to the vet, and I'd be like, oh, man, I hope everything goes well at the vet. No, I'm just kidding. Yeah, it is officially fall. I don't know where everyone is, but here in Michigan, completely fall weather. You know, I'm looking at ATs wearing a hoodie with a vest over it. Once you've got 2 layers of outerwear, that's officially fall, right? Because you can wear like a hoodie late summer. I was kidding, Shelly. It was a joke. Kind of. Yeah, but once you start wearing 2 outer layers, i.e. a like hoodie and a jacket, or a jacket and a hoodie, whatever it is, it's officially fall. We've only got a few minutes left. Not a lot of stocks up. Some stocks that are up. Casino stocks. Las Vegas Sands. Las Vegas Sands is the world's largest operator of fully integrated resorts featuring casino, hotel, entertainment, food, and beverage. So Las Vegas Sands has a lot of exposure in Macau. Basically China's version of Vegas, I think. So I'm pretty sure Macau... Whoa. Holy shit. I didn't know this. I'm pretty sure Macau, like, it is technically, like, separate. I don't even know. But holy cow, I'm on the Wikipedia page for Macau, and it says it is the most densely populated region in the world. I thought that was, like, somewhere in, like, Bangladesh, I would have guessed. Originally a sparsely populated collection of coastal islands, Macau, often referred to as the Las Vegas of the East, has become a major resort city and top destination for gambling tourism, with a gambling industry 7 times larger than that of Las Vegas. Wow! The city has one of the highest per capita incomes in the world, and its GDP per capita by purchasing power parity is one of the highest in the world. It has a very high human development index as calculated by the Macau government. So essentially all you need to know is this is China's Vegas, but it's way bigger, and people got a lot of money. And so people... All right. Shelly, you're muted. We didn't need to know that. We didn't need to know any of that. What was I going to say? Anyway, all you need to know about Macau is that it's like Vegas, but it's in China, but it's way bigger, and people got a bunch of money over there. So if you are a U.S. Casino company like Las Vegas Sands, you want a casino over there. You want property over there. And you get exposed to all of these rich people, you know, in China gambling at Macau. There's downsides to that too, right? When you have more exposure, like Las Vegas Sands does, to Macau, you're more disposed on the downside, right? We saw when China was going through lockdowns, these stocks getting absolutely chewed up. And it wasn't really because of the Vegas outlook here in the United States. A lot of this was because of the Macau outlook, saying, okay, hey, guess what? I just read that Macau is 7 times larger, does 7 times more business than Vegas. So if your company that is supposed to do 7 times more business than your company here is completely shut down, that's probably not going to be great for bottom line. So You know, I think here, looking at the chart, Las Vegas Sands, dude, look, I'll tell you this right now. With how much recession fears we've had, with how much inflation fear we had, Vegas is still popping. Maybe that will be the true sign that the Fed hikes enough to where people don't have enough money to go out and gamble away $10,000 in Vegas over a weekend. Fine, I can get behind that. But for right now, it seems like people are going to Vegas, spending money there, and we'll see when that changes. I know personally, I think I stopped, and this is all personal, but I basically stopped using DraftKings as my personal sportsbook app because they don't have, I think the DraftKings, let me check on my phone. They might be partnered with some sort of casino in Vegas, but what I think the benefit to doing it on something like on like Caesars or MGM is they have benefits, rewards you can actually use at their Vegas casinos. DraftKings, to my knowledge, doesn't really have that. Okay, so it says it is partnered with Bay Mills. Do they have one in Vegas, though? I don't think so. So that's the thing. So DraftKings is partnered with a casino that's not even in Vegas. If I'm gonna be wasting money on my sportsbook app betting on football and shit, I at least want one of those like, hey, you get a free night stay if you come over here. Yeah. Tough day. Did anyone yeah. We got about 4 minutes left. JRP wants to look at ape. Let's look at ape. Juicy. This might be the best day ever in ape's short existence so far. Let's see, we had a plus, oh no, we had a plus 8% day here. Look at this on the 5 minute. Yeah, ape. All right. Hey, I mean, if you're in this, you like it. I'm not getting into it. All right, guys. That will be pretty much a wrap for us today. Oh, Shelly's mad. She got muted. Money Mitch be having a big show today. Couple good guests there. We'll be talking to Brian Shea, the CFA and founding partner at the Capital Stewards. I like to consider myself a capital steward. Who's Castro in the morning? Is that what you guys call Mitch now? Well, that was fun. I agree. Well, before we leave, we'll do one more quick check on the overall markets. QQQ's up about 0.1%. Bitcoin up 1.5%, right above that 19,000 level. If you're one of those big Bitcoin maximalists out there, you're happy to see it above 18,000, but you're not happy to see it below 20. SPY down. Woo! So your SPY is down 0.6%. Your Qs are up. So tech showing some relative strength today. Your Dow down 0.7%. So value showing relative weakness today. Is growth showing anything? Not really. ARKK pretty damn flat. So a red day where the Dow is down more than ARKK is. That's rare. What even is adverb is like quickly, right? I haven't noticed that. I'll check that out. I mean, I'm down. I'm always down to bet on something. So if you guys want to bet over under, you set a line, I'll bet on it. If I were a betting man. Alrighty, y'all. That'll be a wrap for us today. We will be back tomorrow. Just a day away. Shana Tova to all that celebrate. And we'll be back tomorrow. Love you guys.